Do you know why 80% of people lose money in the stock market? It's not because they lack knowledge. It's not because they don't understand technical charts. It's not even because they have less money. They lose because they cannot control fear and greed. Warren Buffett once said, "The most important quality for an investor is temperament, not intellect." In other words, in the stock market, it's not your brain that saves you. It's your mindset. And friends, today, I'm asking for just 15 minutes of your time. In these 15 minutes, you will learn lessons about trading psychology that can transform the way you see investing. Lessons that could put you on the path of legends like Warren Buffett himself. Buffett always said, "Be fearful when others are greedy, and greedy when others are fearful." So, are you ready? Because what you're about to learn can reshape your entire investing journey forever. The first lesson is, fear and greed, the two enemies of every trader. Markets don't just move because of news or charts. They move because of emotions. Fear and greed, two forces that control most traders. Fear makes you exit too early, missing the profit you deserved. Greed makes you hold too long, turning winners into painful losses. If you don't control fear and greed, they will control you. The best traders aren't fearless. They are balanced. They know when to step back and when to push forward. Master your emotions, and you master the market. Imagine this. You buy a stock at $100. It rises to $120. Instead of being satisfied, greed whispers in your ear, "Hold it, wait a little more, you'll earn even more." But then the market turns. Suddenly, that same stock falls back to $90. Now fear takes control. You panic, you sell, you take a loss. This cycle of fear and greed destroys traders every single day. Friends, the truth is, if you want to win in the stock market, you must learn to master these emotions. Instead of letting them master you, remember, the market rewards those who stay calm, not those who act out of panic or greed. The great investor Charlie Munger once said, "The big money is not in the buying and selling, but in the waiting." Second lesson is patience. In trading, impatience is your biggest enemy. Many beginners expect quick profits. They want to double their money overnight. But the truth is, the market does not reward impatience. It rewards those who can wait. Think about a farmer. When he plants a seed, he doesn't dig it up every day to check if it's growing. He waters it, nurtures it, and waits patiently. Trading is the same. If your research is strong, if your strategy is clear, then trust the process and let time do its work. Patience is not about doing nothing. It's about doing the right thing and waiting for the right results. Patience is the hardest skill in the world. It's not waking up early. It's not staying silent. It's patience, especially in the stock market. Patience is the ultimate weapon. Buffett said it best. The stock market is designed to transfer money from the active to the patient. Most people rush. Buy today, sell tomorrow, make quick money. But Buffett built billions because he mastered waiting. The market is like a jungle. Every day, there's noise. But the lion that wins is not the one chasing every rustle. It's the one that waits for the perfect moment. A true investor is the same. He finds the right company, invests, and sits with patience. Buffett's favorite holding period? Forever. So next time a stock rises or falls, will you panic and sell? Or will you wait like Buffett and capture the real wealth? The market is not a race. It will always be here tomorrow, next week, and next year. Impatient traders force trades, chasing every move, and end up losing both money and peace of mind. But the patient trader waits. He knows that opportunities come to those who are prepared. One perfect setup, can be worth more than 100 rushed trades. Patience is not about doing nothing. It is about waiting with discipline, ready to act when the right moment arrives. In trading, patience is profit. Third lesson is discipline, the edge every trader needs. A strategy without discipline is like a map without a traveler. It looks good on paper, but it won't take you anywhere. Discipline is sticking to your plan, even when emotions scream the opposite. It's about cutting losses early, protecting your capital, and waiting for the setups you trust. Most traders don't fail because of bad strategies. They fail because they break their own rules. Discipline is the bridge between knowledge and consistent profits. Without it, you will always start over. With it, you will always move forward. Discipline is the backbone of every successful trader. Without it, even the best strategy will fail. Discipline means following your rules, no matter what your emotions say. It means taking a trade only when your setup is clear and exiting when your plan tells you to. Most traders lose because they break their own rules. They chase the market. They increase their risk in greed, or they refuse to cut a loss out of fear. But a disciplined trader is different. He knows success is not in a single trade. It's in the consistency of right actions over time. Discipline is not a skill, it's a habit. And once you master it, the market will respect you. Fourth lesson is risk management. Protect before you grow. Every trader dreams of profits. But the truth is, profits only matter if you can protect your capital. Risk management is your shield. It decides whether you stay in the game or lose everything in one bad trade. A smart trader never risks more than a small part of his account. He knows, no matter how perfect a setup looks, anything can happen in the market. The undisciplined trader risks too much. One loss, and his account is gone. But the wise trader survives every storm because he manages risk first and thinks of profits second. Remember this rule. Your job is not to win every trade. Your job is to protect your capital so you can trade tomorrow. Fourth lesson is consistency, the hidden power of trading. Success in trading doesn't come from one lucky trade. It comes from repeating the right actions again and again. The market rewards consistency, small, disciplined steps, taken every single day. Build the foundation for long-term success. The inconsistent trader jumps from one strategy to another, always chasing shortcuts, but ends up going nowhere. The consistent trader, he follows his rules, keeps his emotions in check, and grows steadily trade after trade, month after month. Consistency may feel slow, but it is the fastest way to lasting success. Next lesson is adaptability. The market is always changing. The market never stays the same. What worked yesterday might fail tomorrow. Successful traders are not rigid. They are flexible. They adapt to trends, to volatility, to shifting conditions. They study, they learn, they evolve. Because in trading, stubbornness is expensive. But adaptability, that's what keeps you profitable. Next lesson is margin of safety, Buffett's golden shield. Now imagine this. You're crossing an old bridge. The bridge can hold 70 kilos. And you weight exactly 70 kilos. Would you risk it? Probably not. But what if the bridge could hold 150 kilos? Now you'd walk with confidence. That extra space, that's your margin of safety. Buffett calls it the 3 most important words in investing. Always buy a stock cheaper than its true value. So even if your calculation is a little off, or the market turns unpredictable, your loss will be minimal. Because mistakes happen. News shocks the market. Earnings disappoint. But margin of safety protects you. The biggest mistake? People chase overvalued stocks out of FOMO. But Buffett reminds us, you don't have to do extraordinary things to get extraordinary results. You just have to do ordinary things exceptionally well. And margin of safety is that ordinary thing done exceptionally well. Think about Coca-Cola. Buffett bought it when panic made the price attractive. He invested in American Express when fear drove others away. In 2008, when Goldman Sachs collapsed in the financial crisis, he invested $5 billion, not because of luck, but because the business was strong and fear had made it cheap. Margin of safety gives you breathing space. It keeps you safe, while others drown in uncertainty. Final lesson is herd mentality, the true test of trading psychology. Think about it. Can you stay calm when the entire market is rushing into a stock? Can you control yourself and say, "No, I won't act without my own research"? That's the true cost of trading psychology. The strength to think differently from the crowd. Warren Buffett once said, "The stock market is a device for transferring money from the impatient to the patient. The crowd is always in a hurry. But the smart investor waits." So, how do you escape herd mentality? First, trust yourself. Before following the trend, do your own research. Never enter without understanding. Second, avoid the noise. Social media, news channels, they amplify the chaos. Even Buffett ignores most market news. Third, build your own strategy with a long-term vision. Your decisions should never depend on what the crowd is doing. Fourth, learn from Buffett. He built his wealth by thinking opposite to the masses. He buys when others sell, and sells when others buy. So the next time your friends say, "Buy it now, everyone's buying," pause. Ask yourself, is this decision based on my conviction or just crowd influence? If you can answer that honestly, you've already leveled up as an investor. Because wealth is not built by following the crowd. It is built with wisdom. Learning trading is easy, but living with true understanding is rare. That's why mindset isn't just another tool. It is the foundation. It decides whether you last in the market or quit halfway. Because the truth is, the market doesn't defeat you. You defeat yourself through fear, doubt, and impatience. But when your mindset is trained, you stop chasing quick wins, you stop fearing losses, and you start seeing the market for what it truly is, a teacher. So remember this, trading is never just about lines on a chart or numbers on a screen. It's about you, your discipline, your patience, your ability to stay calm when the market tests you. Losses will come, wins will come. But what truly matters is how you respond. Do you panic or do you stay grounded? Do you chase the market or do you wait for the right setup? The truth is, every successful trader has learned one powerful lesson. You don't need to control the market. You need to control yourself. Because in the end, the market doesn't reward the loudest, the fastest, or the most aggressive. It rewards those who stay consistent, those who stay disciplined, those who respect the process more than the outcome. So the next time you sit down to trade, don't just ask, "What strategy should I use?" Ask instead, "Am I in the right state of mind to trade today?" That question alone could save you from blowing up your account, and it could open the door to long-term success. Master your mind, and the profits will follow. If this video gave you value, don't forget to subscribe to the channel and join me on this journey of mastering trading psychology. Because remember, when you master your mind, you master your trades.